and welcome. You're watching Business Today TV. I'm Sakshi Batra and this is Market Today, a show where we talk about the latest trends in the stock markets. Well, it was a great day for the stock markets because the fag end buying, we actually saw Nifty climbing over 18,400 today, and also the Sensex managed to end with gains of almost 250 odd points, 61,872 as the closing level today. Remember, what contributed to the market momentum today in the second half of trade was the gains in auto sector, in oil and gas, in financials, all of which added about 0.5% each, in trade today. So that was what pulled the markets higher, especially the Nifty Bank. If you saw in the beginning of the trade today, we actually saw some red ticks on the Nifty Bank, but towards the end, it ended almost at the day's high with 0.7% gains right here. Which were the top gainers and losers today? Well, ONGC was shining bright, 2.2% uptick for that one. What dragged the street was, in fact, Coal India. Post the numbers that we've seen, 6% drag that is coming about. The best sector, Nifty Bank, as I told you, that contributed to the gains, and the worst sector turned out to be on the Nifty FMCG front. Let's welcome our guest for the day. I'm joined by now Avinnash Gorakshakar, Director, Research of ProfitMart Securities, who will help us understand more about the markets and on one stock that is going to be the focus of this show. Welcome, Mr. Gorakshakar, and thank you so much for taking the time out. Well, first up, your thoughts on the markets, the momentum that we've seen towards the fag end today after 2 days of almost consolidating moves that we've seen in the markets. Are we going to, inch towards those all-time high levels this week soon enough, and what's going to pull the indices higher?
Yeah, first of all, thank you, Sakshi. Markets have definitely, in the last 2 days have shown a lot of resistance after Friday's super rally, which we saw in the markets. One thing is very clear that inflation numbers are now going to cool off in the US, and I think going forward, the data points which are going to come are quite encouraging. So, that is a very big positive factor for US as well as other emerging markets like India. As far as Indian markets are concerned, I think, Sakshi, the quarter 2 numbers have been a mixed bag. I think many companies have declared, slightly pressure on profit margins, commodity prices having increased. There are fears that some kind of slowdown could happen at least for the next 1 or 2 quarters. So I think the markets may take a little more time to cross the new high. But overall, I think the sentiment continues to be positive. I think today's second half buying in automotive, industrials, as well as the banking sector actually helped the markets. And I think these are the sectors which are going to show a significant outperformance in the earnings performance over the next, say, couple of quarters. So I think overall it's going to be a stock specific market, a more of a stock centric market. So overall on the index level, as long as the Nifty is above 18,300, 18,400, I think the sentiment would continue to be positive, and I think FI flows are going to be very important. As long as FI flows are positive, the markets would definitely give it a thumbs up, and in the near term, I think markets would definitely be buy on decline. There are going to be lots of opportunities in the market for investors, which investors should capitalize. But returns could come in little moderately now since the base is on
Right.
the high level.
Okay, understood that. So that's as far as the market outlook is concerned. But the stock that we're going to be focusing on today is the insurance behemoth LIC. Now, why is it in focus? Because of the Q2 FY23 numbers that actually surprised the street this time. In fact, LIC posted the best intraday gains right after posting its earnings, 9% intraday, and that's since listing. We've not seen that kind of an intraday gain on LIC shares. They got subdued later on as well, on the next following day as well. But the Q2 earnings were in fact quite startling, because we actually saw a tenfold jump in its net profit at 15,950 odd crore rupees. Let's find out whether the earnings are actually giving any signs of recovery on the stock price front as well. Mr. Gorakshakar, first your thoughts on the earnings as far as LIC is concerned, especially on the profitability. It's a multifold jump. Help us understand how much of the impact of accounting standards is there on these numbers.
No, I think, Sakshi, first of all, there has been change in the accounting policy, but definitely, this apart, the operating metrics for the business have also improved quite significantly. In fact, one of the key metrics which we observe is the value for new business margin, and which has gone up to 14.6% from 13.5%. So I think that means LIC is consciously now making an effort to sell more profitable policies. The old annuity policies are getting slowly marginalized, and the management has also mentioned earlier that they want to focus on the higher end policies which give them a better markup. So that is point number one. terms of the business growth, on an APA basis, it was 45% on a quarter-on-quarter basis. So that also shows the robustness of the business, post-COVID. My sense is that, the December quarter could be a slightly moderated quarter, and one should not compare, the September quarter again on a like-to-like basis. But the Jan to March quarter is typically one of the best quarters for all insurance companies, and that should be a very robust quarter for even LIC, considering the fact that the maximum business comes during the Jan to March period.
Okay, understood that. Also, Mr. Gorakshakar, the insurer is now slowly increasing its market share in the non-participating products. Is that something to cheer? Remember that LIC historically has been more focused on the participating products, where minimal return is guaranteed and policyholders also participate in the profit of the policy. So, looks like now the product mix is also improving gradually. Can that help LIC stock recover?
Yeah, definitely. I think this is one of the key challenges, Sakshi. During the time the company made its IPO, the management made a very conscious effort saying that this is also going to help them. The business mix, once it starts improving, will obviously give a better markup to the operating profitability, but this may not happen immediately. It would take a couple of quarters.
Okay. Also, premium incomes have displayed growth this time. First year premium income during the quarter rose 11% or so to 9125 crores. Single premium income has increased sharply by 62 odd percent as well. How big a positive is that?
No, I think these numbers have to be viewed, on a base effect. I think if you
Okay.
compare previous September numbers, that was on a lower base. So I think,
Hmm.
these kind of numbers for a company like LIC, Sakshi, would not be really be comparable
Sure.
because the base is extremely large. So that's why I said December quarter apart, the Jan to March quarter should be a more remunerative quarter. And I think at least one good part is that the management has now recognized that business mix needs to be changed. But I think one, key factor or maybe development which most of the analyst community would be awaiting is the management commentary and a proper con call, from the company, which is yet to happen.
Yes, yes, very true. So that we will wait to see if the management really does that. But, I wanted to understand on the stock price movement that we saw right after the earnings, a 9% intraday rise. But despite that, we are seeing that the stock price still remains about 25% or below its issue price. So what will really help the stock really regain the lost ground on stock price?
No, I think markets would like to see consistency and continuity of the profitability, Sakshi. If
Hmm.
this continuity and consistency is maintained, then I think, at least in the near term, one could expect levels of 800 rupees plus, although
Okay.
it's still away from the IPO price. My sense is that, the stock has been battered very badly, and there was hardly any expectations from the markets when the quarter two numbers came out. So I think the markets will take some time. Probably they'll wait for the December quarter and the March quarter, but hopefully the second half of FY23 should be significantly better than the first half. So I think it's going to be another 6 to 12 months before we could see a decent rise on the LIC counter. But on a very near term basis, 800 rupees plus looks very much possible, considering that,
Okay.
the market share of LIC by end of first half of FY23 was 68%. The
Yes.
APA business on a sequential basis was up by 45%. So these numbers are definitely reassuring.
Okay. So the numbers are reassuring, but you said 800 rupees kind of stock price is what we can expect, still far away from the issue price. Do you believe the high cost structure, the potential service gaps and declining market share in the individual business per se are actually posing as key barriers on the upside potential of the stock?
Yeah, I think LIC will have to do a lot of legwork if they want to really compete with the private sector insurance players. And I think today the customer has got a very varied choice of investment insurance products which are available. So I think you're right in terms of technology, in terms of marketing, and in terms of the sales pitch, and in terms of the product mix. All these things need to be carefully done, and this may take a little more time. But hopefully, the direction has started, and I only hope it gathers further momentum.
Right. Also, one more point on that embedded value front, because that remains flat. Is that a concern?
Yeah, I think typically, Sakshi, embedded value has to be seen on an annual basis. What LIC has done is they've given you the embedded value as of September. So my sense is that post March 23, I think the embedded value could see a decent 8 to 9% kind of rise, which is a normal rise. If you see on an annual basis, most of the other insurance companies, the annual increase in the embedded value is roughly about 8 to 10%. So I think that is something which would be more crucial. A 6 monthly number, that to an unaudited number, is something which I don't think the markets would take
Sure.
it very seriously.
Okay, but just like how you pointed out that there are some reassuring factors in the results, we've seen that LIC still leads the private peers in the top line growth in H1 FY23. But do you believe that on the valuations front, LIC will match the private sector peers, say in the new business margins, that's all?
I think it all depends actually on the performance because clearly,
Hmm.
if you see the history of LIC, it has always delivered pretty moderate kind of numbers, and that too in a very kind of lackluster product kind of bouquet. So
Right.
as long as the business mix changes, I think markets would be more than happy, and I think it's going to take a long time. See, currently the liquidity also in the counter is hardly 2%. So there are very few large FIIs or institutions who have actually participated in this counter. So I think it's going
Hmm.
to take a long time. You'll have to wait for at least the next 2 to 3 quarters before you see any kind of major re-rating here.
Right, absolutely. If I have to understand from you the pecking order for all the investors really keen to tap the opportunities that present itself in the stock markets as far as the insurance players is concerned. So help me understand, where does LIC stand?
Yeah, I think in the pecking order, I think my sense is that possibly, SDFC Life is probably the best well-positioned player.
Hmm.
Maybe LIC, because of its size, could come in at either number three or number four.
Hmm.
My sense is that, most of the private sector players have focused more on the profitability part rather than
Hmm.
on the business side. So I think, LIC will have to make a shift on the profitability matrix, which is absent till now. So to
Hmm.
that extent, I think, we'll have to wait for some time. But yes, as a kind of a contra value pick, LIC definitely categorizes as a kind of a small inclusion in anyone's portfolio. Probably you will require to give it some more time, but definitely at the current odd levels, most of the negatives are more or less factored into the price.
But can it ever be a multi-bagger stock? That's what most of the investors would want to know.
No, Sakshi, I think one thing is very clear that for a large cap company, whether the company becomes a multi-bagger is something very difficult to visualize because most of the multi-baggers have one common, matrix is that they have a very lean equity structure, a very small optimum capital allocation structure. And in a large business like insurance, I think one can only expect steady returns and multi-bagger returns are definitely not possible. I think that is a reality which most, investors will have to digest.
Okay, understood that. Well, on that note, thank you so much, Mr. Gorakshakar, for being with us and helping all our viewers really understand what to make of the LIC Q2 numbers. How much does it really reflect on the kind of stock performance that we can expect going forward from here? Thank you so much for being with us.
Thank you.
All right, and with that, we wrap up this edition where you have understood that LIC as a potential bet definitely presents itself for some upside from current levels, 800 rupees odd, but definitely it is going to take some time before it reaches that issue price of about 940, 945 or so. But also, keep in mind, just like how Mr. Gorakshakar pointed out, that it is definitely not going to be a multi-bagger stock, and that's something that all the investors really need to digest. He also gave us the pecking order where he places HDFC Life among the insurers at the top bet as well. Thank you so much for being with us on the show.